Hey guys, good afternoon, everybody. Today is Monday, September 25th. It is 1:55 right now. Our scheduled mentoring sessions for 2 o'clock. So I'm going to go ahead and set up this room real quick and we'll get started with our session for this week. So if you guys have any questions, feel free to put your questions in the chat. Otherwise, it's just a couple of things that we'll be looking to cover today for the most part. Basically the updates, a couple of new spreadsheets, discords, and then I guess like strategies that we're currently looking at. So I'm gonna go ahead and just update this real quick. And we should be good to go. That's good. I think here, and it looks like we are good to go. Let me get this link sent out to you guys here in the premium. All right, so I'll get a few moments for people to make their way in. There. All right, so I'll get a few moments for people to make their way in, and we'll get started shortly. Make sure everything's good here. Spreadsheet looks good. Good. No interest for today. All right, perfect. All right, so hey guys, good afternoon, everybody. Today's Monday, September 25th. It is 1:58 right now. Our scheduled mentoring sessions for 2 o'clock. So I'll just give it a few more moments for people to continue making their way in. But if you guys have any questions, feel free to put your questions in the chat, and then we'll cover your questions in order. I don't really have much to cover today. This is why we don't typically do the mentoring session every week anymore, because we're not really doing anything new. Everything that we're doing is pretty much a repeat of what we've been doing for the past couple of weeks and past couple of months. So for this session, I'm probably going to cover the stuff that we're already covering. And then on top of that, I'll be going over a couple other things that I'm testing. They're not new strategies, but they're basically, they're just different variations to the strategy, like mainly applying them as the first entry that appears for the day. So I'll just give it a few more moments for people to make their way in. If you guys have any other questions, feel free to put them in the chat. This is your guys' time. So whatever you guys need me to cover, if there's any strategy that you guys want me to review, any examples, if there's any confusion with everything, with anything really, just let me know. We'll cover everything in order, and we'll go into as deep as detail as possible. So I think that's the best way for you guys to really understand, is by going over examples and showing you how things differ from how you see things. So, hey, Maria, how's it going? All right, so let's get a few more moments. If nobody else joins in, then we'll get started with the session. So let me just review the Discord. So if you guys are not part of the Discord yet, which I'm pretty sure everybody here should be part of the Discord, this is what the Discord looks like. If you guys just joined the Discord, you get automatically put into this group right here. Once you're in this group right here, make sure that you go to the top where it says Kodi Kai Trades, click on Show All Channels. If you don't have that clicked on, you're only going to have a few channels here, which are suggested, start here, profits, community, etc. But if you go up here and click on Show All Channels, you guys will see all of the channels on the list here. So I'll just go over and show you guys what everything is again for you guys who are new here. You'll typically start here. If you go down to premium access, if you guys want premium access, you guys can, but pretty sure majority of you guys here already have that. Going down to introduction, this is typically where you want to introduce yourself. This is where you'll get most connected with everybody else in the group. So if you guys want to get connected with other people who like the strategies that you like, this is a perfect place to go and just meet everybody. Other than that, we have a FAQ here. We'll be updating this as we go along. You know, whenever I get questions, I get asked a lot, I'll update this. I just haven't really worked on this yet. Other than that, we have these strategies right here. So if you go down to the strategies channel, it has pretty much all the videos of all the strategies and indicators. So if you're confused about a specific strategy or a specific indicator, you can go to this channel and you can look at everything up here. If you guys want to go to the actual course, the course is probably a little more easier to navigate through, but this is just a quicker way to identify you know, strategies and indicators if that's exactly what you guys are looking for. So if you guys pull up the course, this is what the course actually looks like. So this is what the course looks like if you guys want to pull it up. Everything here is pretty much, you can find it in the Discord as well. So if you go on here, everything's more organized, but if you just want a quick little overview of like a strategy, indicator, or anything like that, you guys can go straight to this tab here and just pull up whatever you're looking for. And if you want to go to the YouTube channel, you'll just click on this right here. It'll bring you to the YouTube channel, and this will have a playlist of pretty much every strategy and every indicator video. So just a quick review there. Again, if you guys are part of the premium, you'll see this premium category here. This is where the Zoom links will be posted. Under here, announcements, you'll just have all the announcements posted here, all the live sessions, all the mentoring sessions, all the results. They're all posted right here. For official profits, these are my profits. For team profits, this is everybody else's profits. And then this is where all the data is being housed. So if you go down to the trading journal tab or category, you'll see down here that there's a couple different channels where we have all the trades posted. So for 2023 official live trades, if you click on that, the spreadsheet with all of the live trades that we've taken this year will come up. For the year so far, at least up until August. I update this at the end of every month. So at the end of September, I'll update it, but this is up until August. So from January 2023 to August 2023, we currently have 154 wins, 21 losses, total profit of 23,000 pips for a total win-loss ratio of 88%. So that's pretty solid overall. These are all the trades that we take that are official that I take myself. If we ever cover a trade and I tell you that it's risky and I don't take it and it wins, it's not documented. If it loses, not documented either. It's only the trades that I personally take myself. So for example, today we took a trade testing out the intraday scalp strategy, right? You guys can see over here from September 2023, there's no entry for September 25th, even though I did make profit on it. You guys can see over here for the day I locked in like $1,000 per account. I didn't document it here. Even though it was a win, I didn't document it because it's not an official trade or official strategy that we're applying. Once we move it into the official strategies, then we'll start documenting it. But like right now, not documenting it unless I tell you guys ahead of time, like, hey, I'm going to take this entry. If you guys want to take it for the full move, we'll take it. And that's when we'll count it as an actual trade. So yeah, if you go to the Discord, that's going to be the official trades for 2023. If you guys want to follow the documentation of the other strategies, we have the breakout V2, momentum counter scalp, intraday scalp. This is not necessarily a new strategy. It's an old strategy. We're just applying it in a way that we're looking for entries between, well, basically just an entry, the first entry after market open, because that's usually where the volatility is high enough. So intraday scalp, this is an old strategy. It's basically the first strategy that I taught you guys. We'll go over that in detail. And then also the high level momentum scalp, because these strategies have very high win rates. And if you just stick to the first entry on open, it's going to have a pretty good win rate. And the cool thing about this is that you can apply this for a 1-to-1 risk reward. I think that's the biggest selling point. Biggest selling point is that it's a 1-to-1. Second, that it's a high probability strategy. And third, that it comes up pretty much every day. So yeah, William said this is a lot better than Telegram. We have so much here and it's organized. Yeah, I agree, William, 100%. The Discord is just a lot more organized compared to Telegram. You guys will see on Telegram, we had like 5 groups and it was hard to really find where everything was. So We're not going to delete the Telegram. It'll still be there. It's just not going to be active. So if you guys ever want to go back and look at old stuff, it's still going to be available there. But all right, if there's any questions, guys, feel free to put your questions in the chat. We can cover whatever you need to cover. Otherwise, I'll probably just review, I guess, each strategy that we're currently covering. So I'll cover an example of the momentum counter scalp. I'll cover an example of the breakout V2. I'll cover an example of the intraday scalp. And then lastly, the high-low momentum scalp. These are not new strategies, so you guys should already know these strategies. It's just the difference here is that we're turning it into a one-to-one strategy. And then also we're only focusing on the first entry after open. So that's pretty much all that we are looking for. Yeah, no, definitely, Miguel. So Miguel said, hi, Sean, I'd like to check an example for the intraday scalp. Yeah, so we'll take a look at that first. And then we'll go on to the other strategies. So we'll look at that first right there for Miguel. We'll go to the intraday scalp. I'll just copy this real quick so that we'll have the criteria. Let's go to the one from yesterday because we already had the one from today. Obviously, we looked at it during the live session. I'll go over here to a clean chart and I'll just put up the indicators that are actually necessary. Turn off the high low. Not necessary. Let's go to yesterday, or not yesterday, Friday, since today is Monday. So we'll go to Friday over here. And go to 6:30. All right. Maria's asking where is the Excel sheet? The Excel sheet's in the same place where all the other Excel sheets are, Maria. So if you go to the Discord, let's go down to the bottom right here. Let me see if it's enabled. Yeah, so you should be able to see it. It's in the same place where all the other, it's under Trading Journal. So all the Excel sheets will be under Trading Journal. One of the channels down here, intraday scalp. So all right, let's take a look at this here. So I know you weren't around before, Miguel, but this is like one of the very first strategies that I introduced to everybody. This strategy used to be applied like on the higher time frames on Forex, but as you can see, it works for pretty much all assets. So let me just measure this candle real quick. Okay, obviously this candle is too big. Let me put the criteria over here. All right, so for the intraday scalp, you're looking for a momentum signal after 6:30 a.m., which is market open. So I'll mark up 6:30 right here. And you're just confirming that it matches with the trend meter. The pivots aren't necessary, but it's going to be an additional confluence. So you're basically just looking for a matching momentum signal, valid momentum signal. In order for it to be valid, it needs to have a red candle within a red signal or a green candle within a green signal. So for example, here, this is a red candle with a red signal. This would be considered a valid momentum signal. Let me adjust that so that that's in the criteria. I mean, it's pretty much self-explanatory, but we'll put it there anyways. Okay. So market open right here at 6:30. You're looking for the first momentum signal. So let's just go in order. I'll show you all the candles in order so that you can see what's like considered an entry and what isn't. So looking at this right here, first identify a valid momentum signal after 6:30 a.m., right? So market open right here at 6:30. There's a valid momentum signal right here. You can see it's a green momentum signal with a green candle within it. So this is going to be considered a valid momentum signal for a buy. Second, you want to confirm that the trend meter matches the momentum signal. Another thing is you want to make sure that the trend meter is set to chart. So the default settings are going to be at the intraday settings. So if you have it set to intraday, which is 30-minute, 1 hour, 2 hour, and 4 hour, this is irrelevant to your trading if you're scalping because you're trading on the 1 minute. So you don't really care what's happening on the 30-minute, 1 hour, 2 hour, 4 hour. It's so far out. So in order to set this to the current time frame, you just want to go down and click chart. So change the settings to chart here. And that's going to give you the current trend. So once you have that set up, now you can go look at the requirements. So first requirement, valid momentum signal. Second requirement, confirm the trend meter matches. It obviously doesn't match. We have a green momentum here and a red trend meter, right? So once you confirm that, you're like, okay, this doesn't count. So now you're going to look for the next signal. The next signal is right here. So this is going to be considered a valid momentum signal. It's valid because we have a sell momentum signal with a red candle within it. So step one's met, identify a valid momentum signal after 6:30 a.m. This right here is a valid sell signal, has a red candle within it. Step two, confirm the trend meter matches the momentum signal. The trend meter down below is red, so you got red and red. You're basically just matching the colors together. Third, you're going to enter on the close of the momentum candle. So right here, you're going to enter a short position. And then your ATR is going to be, your TP and stop loss is going to be set at the ATR. ATR right here is currently 20. So you're going to change this to 20. And that's going to be the setup. However, the thing that you want to look for next is look down at the notes, right? It says if momentum candle is over 300 pips, skip to the next entry. Right here, you can see this momentum candle is a lot farther than 300 pips. So if you go and you measure it, so you measure from the opening right here, and you measure it up, this candle is 500 pips. It's way too big, right? It's way too big. And the reason why you don't want to take this trade here, or you want to skip this candle, is because when the candle's huge like this, what happens a lot of the times is price will retrace up either to the halfway mark and come back down, or it'll retrace to the entire candle and do a complete reversal. So you want to avoid getting caught in this fake out right here, right? So in order to do that, when you measure the candle there, I mean, you'll see it's pretty obvious. When you're looking at it right here, and you're like, okay, this is a 20 pip stop or a 20-point stop loss, and your max is 30, it's pretty obvious, right? This candle is way too big. So since this doesn't meet criteria, you skip it and you move on to the next one. We have a buy signal here, trend meter is red, skip that, it's not going to meet criteria. So you can see as soon as you have the criteria and requirements in your mind, it becomes a lot easier to just look at it and make sure that they match instead of having to look at everything step by step. So we're looking for a sell signal. All right, almost there. All right, we have another sell signal right here. So looking at this candle, we have a sell signal. It's a valid sell signal with the red candle within it. We have a red trend meter. Everything lines up. You enter a short position right here. You're going to measure the ATR. ATR is currently at 20. We want to make sure that this candle is not bigger than 300 pips. If the stop loss right here is currently at 20 and it's slightly above it, you can pretty much assume that it's not going to be 30. But if you really want to measure it, you can just measure it and you're like, okay, it's all obviously within criteria, right? Once you have it lined up right there, you have an official entry. So you have this lined up, 2020 TP stop loss, you let the trade run, and there you go, full TP on the next candle. And there goes an example of the intraday scalp. So you're really just looking to make sure that they match. You're looking for the momentum signal to match the trend meter. That's really all it is. I know it's super simple, right? Because you're basically trend trading. So what you're doing with this strategy here is you're just trend trading. You're identifying the trend, and you're looking for momentum, and you're just piggybacking on that momentum. So you have the momentum coming down, you just want to piggyback on it for a quick little move. And it's a pretty nice move because instead of going for 100 pips, you're going for a full 20 pips here, or 20 points. So there goes an example right there. Let me see if I could find one more. So let's go back to the previous day. All right, let's go back to 6:30 again. 6:30, which is right here. Yeah, exactly. William said, nice. Match the colors and trend, then trade. Yeah, exactly. It's pretty simple. You're just trend trading. So I mean, this was like the very first strategy that I taught you guys like a long time ago. I think I first introduced this strategy like 7 or 8 years ago. And this strategy, we used this for years and it worked perfectly fine. The only reason we changed it up was because, market conditions changed. We really didn't need to change the strategy. We just needed to adjust our TP stop loss. But the problem was at the time that we had to make adjustments. So Alan is asking, how many times can you take that trade just once during the open? I mean, for me, I'm taking it once during the open. That's a whole reason for me to apply it because I'm only trading between 6:30 and 8. So you're probably only going to find 1 or 2 between that time period. I mean, it's up to you. If you have the indicators, then you can do it as many times as you like, right? But for my testing here, I only have testing from the open. So, I mean, this strategy isn't necessarily required to be taken only during the open. For me personally, I'm only trading during the open, so that's why I only apply during the open. But if you look at the entire day, so I'll show you some examples here. Let's just show another example right here. And then I'll show you, like, there's other entries that come up. It's not it doesn't only come up once, it comes up like multiple times. So let me just clean this up right here. And let me see if I can put the criteria back up. All right, there we go. So 6:30 is right here. We have a buy signal. It's not matching the trend meter, so there's no entry there. All right, let me go back one more right here. All right, we have a sell signal right here. The trend meter is green. Doesn't match up, so don't take a trade. And here goes a green momentum signal. So again, right here, same thing. Identify momentum signal. It's green. It's valid. Identify trend meter is green. It matches. Enter on the close of the momentum signal. So you enter right here for a long position. ATR, you set it to 1-to-1. ATR is currently at 12. So this is one thing that I need to work on. You know, sometimes the ATR is very low. This is a problem because during the summer, the market's very slow, but we are going into fall. That's why I'm starting to look at the strategy, because volatility is picking up. So looking over here, the ATR is currently at 12. You could still technically take this trade, but your stop loss is going to be super tight. It depends on the spread. If the spread's really, really tight or really wide, then it's going to be a bit of a problem. It's not going to be a big problem, but it's going to be a bit of a problem because when you enter the trade, you're going to be automatically in drawdown, right? So like for the past couple of days, the spread's been at like 190 or above 190. So, I mean, it's not a big deal, but it's gonna kind of throw you off a little bit because you're gonna enter the trade, and if it pulls back too much. So for example, if the spread is 2 points or even 3 points, your entry is going to be right there. You're already going to be in drawdown. So it's going to throw you off a little bit, but for me, I kind of trust the strategy, so I kind of just let it run through. The other thing that I can change here is I can either make it a minimum of 150 pips. You can see right here, it says tentative under notes, use 150 pip TP stop loss minimum. I haven't decided on that yet, but we'll see what happens because the market's going to pick up. If the market picks up, this shouldn't be a problem for us moving forward. So if we don't, if we just take the trade as is and we don't use a minimum TP stop loss, this is going to be an entry. We have a valid buy signal. Trend meter is green. Everything lines up. ATR is 12. You can see this candle is not bigger than 300 pips, obviously. If you took a trade here, you let the trade run, you can see it go straight through TP. So a lot of times it doesn't matter because even if the spread's kind of wide, it typically doesn't go into drawdown. You know, it typically goes straight to TP. So there goes another example right there of the entry. So for me, like I mentioned, I'm applying this strategy just the first on open because I'll show you right now. So if I go down to like 8 o'clock, and there's technically more entries that come up right here, but a lot of times you're not going to have multiple entries. You're probably going to have like 1 or 2 that come up. So there's like one right there. This one would have won. This one right here would have lost, it looks like. You can see ATR right here was 13. So again, it's another problem because the volatility is too low. But it's fine. If you want to take that risk and you want to take multiple entries and you're doing a 1-to-1, it's completely fine because you can have one win right there. You can have one loss right there. You have another entry right here. ATR right here is higher. It's about the same 13. So it'll balance out because it is a 1-to-1 strategy. So right there, full TP. Another one right here. Full TP. So, I mean, depends on what you want to do. Alan, if you have the indicators, then, you know, you can apply it all day if you like. I know some people who do apply this all day. You know, one of our members, what's his name? Kip. So Kip, he applies this strategy with the pivots. He does a pivot scalp, but he also incorporates the trend meter. So he kind of does this, but he also incorporates the pivots. Kip's been on the top leaderboard of true Forex funds for a couple months now. This is the only strategy he applies. He pretty much applies this, you know, throughout the day. So he's found consistency with it, and that's what he does. And that's kind of what I've been telling everybody. You know, if you find a strategy that you like, it doesn't matter what strategy you're applying, just stick to that one strategy and you'll find success. It's really just having the consistency to stick to that one strategy or those two strategies. I feel like a lot of people here, the only people who don't do well is that they don't have the consistency. They can't stick to one thing. You know, they'll stick to one thing and they'll change it as soon as it stops working. But realistically, if you just stick to that one thing, eventually it's going to have its time where it goes through a very long win streak, or sometimes, it'll go through a couple bumps and then it'll just recover at some point. So yeah, it's something that you can apply throughout the session, but me personally, I'm only taking the first one because I can't focus on like 5 different strategies all throughout the session, right? I'm looking at the breakout V2, I'm looking at the momentum counter scalp, I'm looking at the pivot scalp, looking at the high-low momentum scalp. There's like 4 or 5 strategies. If I focus on all of them, I'm going to miss like entries in between because I'm too like, you got to focus on like 1 or 2. These entries sometimes overlap. And if you miss them, then you kind of just wasted an entry there. So that's why I'm just going to focus on the first one on the open. So let me scroll real quick. Let's see, William's asking. Yeah, I'm just taking the first one on open, guys. That's the whole point. That's why it says here, only take the first entry after 6:30. If you guys want to take it after, you guys are more than welcome. But at that point, you're going to start over trading. So if your problem is over trading and you can't be consistent, then you should not be taking every single entry, right? I feel like that's a lot of people's problems. It's just over trading, revenge trading. There's just so many different things that come into play that mess with your trade psychology. So if you just focus on the first entry, I mean, you shouldn't really have a problem because it's a win or loss strategy. You don't really, there's not too much thinking that goes into it. It's like you win or you lose that day, and then you move on to the next day. Alan is asking, is there any info on how successful it is after open? I mean, I have a spreadsheet right there, Alan, but I just started testing it, so there's not too much data here. I mean, if you look at the data, it's at a 64% win rate, but this is a 1-to-1 strategy, so anything above 50 is good, right? So I can't really tell you anything further than that because I haven't really looked that far back. This is as far as the data goes. So I wish I could pull up the data further, but if you pull up the data, I mean, this is as far as it goes on the 1 minute. You can't really pull up anything further than that. So I just pulled up the data with whatever data we had available. I mean, if you want to go back further, you can, but there's a way to go back further with the data. It's not going to be as accurate because you have to go and put in like a specific symbol. But you can see right here, the farthest data we can go back is September 3rd. I think, yeah. September 3rd, but then it skips over to, or 4th actually. Yeah, so I have the data right here up until that date, September 4th. So, I mean, you can't really pull it back further. I mean, technically you can pull it back further, but it's too much work on my end. I don't like to back test. I know the strategy works. It's not that I need to back test the strategy. It's that we're forward testing it throughout the market conditions. So you could back test it. I don't really recommend anybody back test unless like you're just running the strategy. If you know the strategy, you know the requirements and criteria, there's no need to back test. I'm not going to give you guys a strategy that doesn't work, right? I wouldn't be applying it myself. So yeah, if you want to back test it to understand the strategy, but you don't have to back test it to see if it's reliable or not. And this strategy has been around for like 8 years. If this wasn't a good strategy, it wouldn't be around. Like, you can literally pull up any time frame if you wanted to apply it on something else. This was like the very first strategy that I introduced. And if you go back, so you can go back right here, just like say September 4th, right? Let me take off the pivots. I mean, you can just eyeball it. Like there's an entry right here. What happens to that full TP? There's an entry right, not there because there's no trend meter. Entry right there. Full TP. You don't really have to go back and do a deep back test. I mean, the strategy works. It just depends on when you apply it. Like right here, obviously you wouldn't be trading. This is London session. It's too slow. You would trade during New York session, right? So like right here, 6:30, entry right there, full TP. Entry right there. What's the ATR? ATR is at 5. Full TP. I mean, you wouldn't take a 5 ATR though, because you'd have to cover the spread. Green buy signal right there. ATR is at 4. Again, you wouldn't take that entry because the volatility is too low. But you can see here that it does hit. I mean, if you can find a broker with 0 spread, then you can take literally every entry, but it's going to be almost impossible for you to find a broker with 0 spread unless you're using like an institutional broker. So, I mean, there's a lot of different ways to test it. Again, you would need the indicators. You can't do this without an indicator. So you have to like just go back and run through, whatever testing that you'd like to run through. But you can run it as far back as you like. And there's a lot of different opportunities there just from back testing it. But again, guys, I don't really recommend backtesting because it's different. When you backtest, you're going to find a lot of good entries, but when you do it real time, it's not going to come up that same way. So I don't like doing backtesting because it kind of gives you like this false sense that like everything's going to hit, when realistically it's not always going to be that way. All right, so let me see if there's anything else here that I'm missing. Let me scroll down. Maria's asking, is it possible to make the high-low indicator show more candles in 1 minute time frame? No, because the data on trading, that's how the data on TradingView works, Maria. So you just have to go back. So like, for example, you know, if you go back to this point right here, you just have to replay it from that point. And then more high lows come up. It's part of trading. You can only have so many, like you can't have so many labels up at once, because if you have a bunch of labels up, then it's going to be overloaded, right? Your charts are going to be so slow. Like if your computer's not strong enough to handle all the labels on the chart, it's just going to slow down your computer. So TradingView has it limited where you can only have so many labels up at once. But if you want to see anything farther back, you just got to replay to that time. So like, for example, right here, there's a high low. You go back to that time and then you have more labels. And then say this is the last one, you go back again, and there's gonna be more labels there. But you can't have more than that because it's just something that's built in a TradingView, because they want it to work on pretty much, you know, everybody's computer, whether you have a fast computer, slow computer. They want to make it accessible to pretty much everyone. Yeah, no problem, Maria. I know, I wish that was a thing that you could do, but it's just part of their system. That's why, like, whenever people ask me like what kind of computer they should buy to trade, you don't really need a strong computer. You can just use a basic computer to take these trades. You know, obviously it'd be nicer to have a better computer, but it's not really necessary. Like I have like a 12,000, like this computer that I have, this iMac Pro, it's a $12,000 computer or more, but I don't even need this much. Like I don't need this much RAM or data or video or any of that stuff. It's just not really, it's not really necessary. I just bought it because I wanted a nice Mac. And it's kind of like, it's like, I can be like, I still have my old laptop from when I first started trading. I still have my old MacBook. And I bought that laptop when I was like in 2010. That's where I first started trading, where I first started doing live sessions, and everything worked perfectly fine. It was just a smaller screen. So yeah, you know, just a reminder, guys, you guys don't need a crazy good computer to trade on. You can like Natasha here, she trades on her phone. Like that's all you really need. I wouldn't recommend it, but you know, it's something that you guys can use if necessary. Sorry, let me go a little further. Let me see if there's any other questions here that are lined up. Let's see. So Alan's asking, he said time to clone you. You know, that's what I tried to do. So I started a mentorship where I was trying to mentor people to basically make clones of myself, because what I wanted to do is I wanted people to basically trade my strategies. The thing is, I have so many strategies here, right? I have like 30 strategies here and they all work good. So what I tried to do is we tried to start a mentorship where I could like focus on one person and I could just make them the best trader of that specific strategy. Then what I was going to do was I was basically going to keep mentoring them, but then I keep a percentage of their profits, because I'm basically just guaranteeing that person's going to kill it at trading, right? Because they're going to be a clone of me. It's not that easy. Like I tried to mentor some people, and you know, my trade psychology and the way that I read the charts, you can't just like transfer that to somebody. Like if you guys have seen how I trade on live sessions, I see a lot of things that a lot of people don't see. So it's always, I wish there was a way to clone myself. The way that I'm currently cloning myself right now is that I have copier accounts. So you guys have seen my accounts right here, right? What I'm doing now is I'm just stacking accounts now. I try to mentor people and try to take a profit share with like whatever they're making, but it's hard to mentor someone because they don't have the same trade psychology as me. So what I've been doing is I've just been opening multiple like different accounts from different prop firms. So I got like 2 prop firms here. This is a fund engineer. This is another one. I have 2 of them. I have 4 FTMOs. I have 2 personal accounts. I have 2 TFFs, and I'm just adding accounts. So this is like my version of like cloning myself so that I can basically multiply my profits. Because you guys can see how much it adds up. I took 1 trade today. Technically, if I just had 1 account, it'd be this one right here. Or if I merge this into a 400K, just be this one right here. But since I have like 10 accounts, it's, I just take one trade and then it multiplies. So yeah, hopefully in the future, I'll try to like revamp that mentoring program that I was trying to do. So that I can try to help people kind of get to that level, but it's hard. Everybody learns at different levels and at different paces. So I can't expect a lot from someone who's not at the same learning pace as somebody else. Like for example, Gion. Is Gion here? No, Gion's not here. So Gion, he passed his challenge. Like all he did was follow my directions. He took one trade a day and he passes 200K. Let's see where's Gion at. Yeah, so Gion's like one of my friends. He's one of my close friends, like in real life. Like Gion here, he's like one of the few people who actually listens to me, like from the mentoring. And you can see over here, like his whole breakdown. All he did was he took one trade every day. He basically took the first intro I took during live sessions, and that was it. So he took 23 trades. He had 100% win rate, 0 losses, locked in 20,000, and then he passed his FTMO. So Gion's like one of the he's one of the few people that actually follow me and follows my directions. And you can see right here, he had no problem. Took 23 trades, all wins, passes challenge pretty simply. It took him some time, but every day he was locking in 1,000. You can see his profits here. Every day, all he did was take one trade, lock in 1,000, lock in 1,000, lock in 1,000, lock in 1,000, pretty much every day until he passes challenge. So it took him a couple of days, couple of weeks, but it was basically a guaranteed way for him to pass his challenge and consistently do that. So let's see, let me scroll over here real quick. So Alan is asking, so all the red or green, you take it on the next candle. Yeah, exactly. You just want to match the trend meter with the momentum signal, Alan. But the thing that you need to keep in mind is the ATR. So you'll see sometimes that it'll work here and sometimes it won't work. So for example, right here, this one didn't play out because the volatility was too low. You don't want to trade when the volatility is super low because it can cause a lot of fake outs. One thing that somebody was mentioning to me the other day too is like you should probably look for if you're looking for an entry like this, you probably want to look for the chart to kind of consolidate a bit. So for example, here, price consolidated a bit. And then once the signal finally came up right here, matching the trend meter, it obviously went straight to TP right there. But again, the volatility was kind of low. I mean, it isn't super low, but it was a little low today at like 14, 15 right there. So there's a ton of different ways to apply this. There's a lot of different confluences you can use. I appreciate a lot of the input that you guys give. I think one of the key things that we've been looking at now lately is the fact that, the range does play a big factor, especially during this type of market, because you can catch a lot of these momentum swings and breakouts. Like for example, right here, range, sell signal, trend meter is red. It's a nice breakout right there. Let's see. Alan is asking if you get the indicators, does that package include the chat room as well? Yeah, everything's included. If you get the indicators, everything's included on there. You get the zooms and pretty much everything. So it's usually it's pretty much a better bang for your buck, especially if you want to trade after 8 o'clock, because you can see a lot of entries here happen after after 8 o'clock. But I don't trade after 8 because it's just out of my trading time. And for me, I like having a schedule. Alan is asking any more time with you. So I used to do one-on-one mentoring sessions, Alan, but I'm at a point where I don't really want to teach anymore because I make so much from just trading. Like you guys saw my profits from this week and whatnot. So yeah, I used to do one-on-one mentoring, but I just don't like to be on the charts as much anymore. Because if I'm on the charts, it's typically like if I'm, say for example, if me and you went on a mentoring session after the live session, and I would see some market movement, it would tempt me to want to trade some more. So like, in order for me to not overtrade and not trade outside 8 o'clock, I just don't even go on the charts at all anymore. So like after 8 o'clock, I'm usually done unless we have a mentoring session. So, I mean, we can do a mentoring session. Like if you sign up to it, we can probably do a mentoring session, or I can bring back these weekly mentoring sessions if you're available around this time, and we can cover this with a group. But as of right now, I don't plan on doing any mentoring sessions one-on-one. It's just too much work for me personally. And I just like, I'm probably like the laziest trader that you'll ever be. like I'm the laziest trader because I don't want to be on the charts as much, but it's beneficial because then I don't really lose very much. Like if you guys have seen my results, like all the profits from like all the profits for the month so far, these are all traded between 6:30 and 8. So yeah, I probably could have had more profit if I traded outside 8 o'clock, but I'm pretty happy with where I'm at right now. Like I'm almost at 100K for the month so far. I'm at 98,945. And all I did was take like 1 or 2 trades between 6:30 and 8. So yeah, I mean, I can still meet with you, Alan, or we can do these group mentoring sessions. Like I'm here to help you guys out. But right now I'm not in the mindset to really do any one-on-ones. Because the thing that I hated about doing one-on-ones is that I would spend so much time on a person and then they would just give up, right? I hate that. Like when if I have mentoring sessions with somebody for like, say I mentor someone every day for like a month. And then once the second month comes around, they're like, you know what, I think trading is just not for me. And I'm like, fuck, I just wasted like my whole month on you and you're not going to trade. So it's just it's more of a psychological drain for me because I don't like wasting time on somebody. Like if somebody's legit and they want to be really good at this, I'm down to help you. I'll bring you to that next level. That's kind of what happened with Gian. So Gian, the guy I was telling you guys about earlier, most of you guys know Gian. He was kind of on the fence for like a good like 4 or 5 years. And then he saw my success. He saw like my cars, he saw where I live, he saw all this stuff. And he's like, okay, Sean's obviously doing something right because the trading thing's working for him. So like he actually finally took the leap. And I've been working with Gian for like 2 months now, and he's pretty consistent. So yeah, you know, it's just a lot of work on my end. And I just don't want to be drained from basically teaching somebody and then just giving up like a month later. So yeah, but eventually I'll be back to mentoring, guys. So don't worry. Like I love trading a lot. So like trading is like something I have a real passion for. So I'm gonna mentor at some point. It's just right now, maybe for the next couple of months, I want to focus on just profiting from trading, and then maybe at some point in time, I'll go back to you know, one-on-one mentoring with people. But yeah, no, definitely, Alan. And I'm glad that you're like interested in it because, you know, if I see that you're interested, then, you know, maybe I'll make an exception. I'll want to mentor you one-on-one. It just depends on the person. Let's see. So let me go down the questions over here again. Let's see. So question over here from Ross. Let me see. Yeah, so Ross is asking, does the momentum bar have any special settings? No, Ross. So everything's set to default settings. So if you just add let me see, let's go to a clean chart here. So this is a clean chart right here. I'll just add the momentum indicator. Go down to invite only scripts, go to the proprietary trading system. And it's pretty much the default setting. So like if you were just to add it on here, I know there's one option here to turn on scalp. Don't turn that on, you don't need to. The scalp is only if you want to see a special colored bar, like for example here, you can see how the bar changes from green to gold. That's if you want to see if the momentum matches 2 different time frames. So say you're trading on the 1 minute and you want it to line up with the 5 and 10, that's what it would be used for, but you don't really need that. So everything's pretty much default settings. All I did was I changed the color of the bars here, so it can be easier to see. I think that's about it. Yeah, nothing else here. So you'd make sure not to check off the scalp, make that unchecked, and then everything else is pretty much default. Let's see what we've got over here. All right, let me scroll up real quick and let's see what else you've got. William was asking, yeah, I'm using a Mac, William. I've always used a Mac. I've never traded on a computer before. So PC is probably going to be more versatile because you can use something like NinjaTrader. You can use other platforms like MT4 as well. It took me a long time to use MT4 on the Mac because I didn't trust it because it's not Mac native. But I've been using it now. So I wouldn't use NinjaTrader on Mac though, because that one you have to use a different program for that. At least for MT4, they have a Mac build out. where it's like, it's not native, but it's basically built in. So you're basically using a virtual server. Let's see, question from Andy. Andy's asking, hi, Sean, I read online about identifying weak and strong high lows. Is that worth looking for? I'm looking to improve my liquidity push entries and avoid the pullbacks and retests and burn too many times. So it's a yes and no question, Andy. I mean, a yes and no answer. So the thing with your question is that I do believe that there are weaker and stronger high lows. The only problem with that is that you're kind of doing too much extra, right? The thing is, you want to overcomplicate the strategy. So with liquidity push, like you mentioned, you've been burned too many times. I think for the liquidity push, a better solution for you, and I just talked with this about somebody else too, because they were having the same problem. Your better solution is to just make your TP stop loss tighter. Because the thing is, if you can do it to a 1-to-1, like if you look at the liquidity push, I mean, I can't pull it up now, but I think, so if you were to do a 1-to-1, right? Like say, for example, because usually it goes straight to TP. So like, for example, over here, there was a liquidity push that hit this morning, right? Right here. If you can set it to like a 1-to-1, like say maybe 10-10, if possible, or 10-15, right? So something close enough. Because typically what happens is like when you get your liquidity push, it's either going to hit your TP or it's not. So you'd be better off if you just like adjust your TP stop loss and then had it set to, 1-to-1 risk reward. So like, for example, here, this one right here would have hit, this one over here. I don't know if it would have hit. I don't think it did. Right. That this lower level right here looks like it would have worked out perfect. Again, the TP, you might have to make it a little different. Like I think 10 is a little too tight. If you do 10-15, I think that'd be better. If you'd lose this one, you'd win this one, you'd win this one. Price comes back up for the retest. You could have won that one right there. Came up again for another one right here. So I think if you really like this liquidity push, you might want to get in touch with Barty too, because Barty over here. So you can see if you just make the small adjustments like that to your TP, you'd be better off. Because so here's the thing with like what you asked about, Andy. If you focus too much on the details, so if you're focusing on weak and strong high lows, it's going to be the worst feeling. You did all that work to identify the weak and strong high low, and you still lose a trade, right? That's going to be like a big punch to your face because you're like, oh man, I did so much work to identify like this weak and strong high lows, because it does make sense. Like, yeah, of course it makes sense, but the worst feeling is you do all that work to identify the stronger and weaker high lows, and you lose the trade still. You're like, damn, and then you're going to see all these other trades if you just followed your initial strategy without going in like into that much detail of identifying the high lows. If you would have went back and did the original way, you're going to see a lot of entries that you would have missed. So you're going to like you're taking a step backwards, because what you're going to do is you're going to focus on like different entries, but it doesn't necessarily mean it's going to for sure work. Another thing that you can do if you really want to do it that way, one thing that I noticed is, so let me see if I can find, I don't want to mess this up. Okay, I'll just go over here. So what you can do is if you want to just make a small adjustment to your high lows and stuff, you can just stick to the higher highs and lower lows, because those are going to be weaker and stronger anyways. So like, for example, here, if you go from like your weekly, or you don't even have to go on your weekly, you can probably go on the lower time frames because you're probably not going to get that far out. So if you want to go on your, say your 1 hour here, let's just go back to today's and we'll mark it up. And then we'll go from there. Let's go back real quick, replay it to this morning. All right, so if you wanted to do this, like what you can do here is if that's something that you want to look into, like I don't want to push you away from doing that, but here's a solution to that too. If you want to do that, just look for the higher highs and lower lows. So don't even mark up the ones in between. Just mark up higher highs, like these right here. You just avoid those. Actually, there's not even any zones down here, so you can go back to the weekly. Okay, let's just do this. So again, like I was mentioning, you'll just mark up the lower lows and the higher highs, basically the HH or LLs, because those are going to be stronger anyways. If you're looking for the stronger ones, you're just going to look for those specifically. So you can do this testing if you want, Andy, but I think the better solution is just to adjust your TP stop loss. Because for me personally, I think that's the case. If you're applying this strategy, it's hard to really pinpoint what's strong and what's not, because the high lows here, they don't necessarily, like, they don't tell you what's like going to be, what's going to hit or not. It's really just identifying what's actually there. Because it doesn't, you're actually looking for the lower, you're looking for the weaker high lows, because the weaker high lows are going to show you what's going to blast through. If it's a stronger high low, it's probably going to bounce off it, because that's probably going to be a resistance or support, right? So you probably don't want to look for the stronger ones, because if you're looking for the stronger ones, that's probably where the bounces are probably going to happen. They're not going to shoot right through. So let's see. Right there, go down to the 1 hour, and we'll just try to play around with this and see, like, if if these become better or weaker liquidity push points. So you're just basically identifying where these stronger levels are. I mean, and this is stuff that I thought about too. So I've actually been looking into this type of strategy where I catch the bounces. So instead of liquidity push, I was actually looking at this to catch bounces. But then I realized that over time, it's not very consistent. So that's why I stopped looking at it. Okay, so that's pretty much all the liquidity points there. And let's just see if price ends up getting to any of those points. Yeah, because see, if you just avoided all those other zones here, you missed out on maybe 6 trades already that would have came through on the lower points. So this right here, I don't know if this, yes, see how how we just talked about that, Andy, where it's a stronger point. It doesn't necessarily break through, it just bounces directly off it. So this might be counterproductive to what you're actually looking for, because it's not even going to be a liquidity push at that point. It's just going to be like a resistance, a support resistance, or it's going to be considered a supply. I used to use these lower low points to identify supply and demand. So it might be counterintuitive for a liquidity push type strategy. You actually care more about the weaker points than the stronger points. As you can see, those points never get touched. Yes, I don't think they even get touched at all today. Yeah, the only time it got touched was down here, and then this is probably considered a supply zone. Yeah, if you go on the weekly, daily, 4 hour. Yeah, so it looks like this is probably identified as a support or a supply zone from where I was at. Or I mean, I don't know, it could be a lot of things. That's the thing when you start to combine the strategies, is because a lot of them will contradict each other. So yeah, I think your better option is just to adjust your TP stop loss. Yeah, no problem, Andy. And I'm glad you brought that up, because that was actually something that I've been looking at in the past too. Whenever I see something that looks like it could be a good strategy, I typically play around with it. And I look for ways to create a strategy around it. And yeah, that strategy actually went opposite of what you were trying to do, Andy. So yeah, I would just adjust your TP stop loss, because the thing with the liquidity push is you want to know right away if you win or lose, right? If it blasts right through, straight to your TP, no drawdown. If it pulls back, it stops you out, that's fine. Go for the next one. Because if you're doing a 1-to-1, if you look at the liquidity pushes, they typically hit. So you're gonna balance out at the end of the week. You might have a couple of losses or a couple of wins on a certain day, but eventually you'll be back in profit. Let's see. Barty's asking if I'm still trading on Top Step. I try to, but it's hard to trade on both, because I don't really like trading on Top Step as much because it's just one account. So I don't really put much focus on that. But if it's available, I'll trade on it, Marty. I just haven't necessarily focused on it too much. All right, let me scroll up real quick, see if there's anything else that I'm missing. Let's see, Alan is asking, I have MT4 and Henko trade. Can I trade off MT4 with this? Yeah, you could. So I used to use Henko trade before. I think they're good as a standalone broker, but for me, since I'm using a copier, the Henko doesn't work well. So I try to add Henko to my account. Let me see if I can find it here. No, so I don't have it on here, but so I tried to add Henko to my copier and it was giving me negative profit. So it doesn't work good with the copier. I think the spread's too wide, but the execution time isn't as good. But if you use it as your main account, I think it should be fine. There's other people in the group who use Henko and it works fine, but not with a copier. So I'm using Hero FX right now for copier on my personal account. I'll let you guys know how they are once I get my withdrawal. But yeah, so let's see. Alan's asking, do I have to make Henko and TradingView work together? So Henko and TradingView are completely different. Henko is compatible with MT4. It's not compatible with TradingView, so you can't use them together. For us personally, what we do here typically is we just use TradingView to chart. So like I'll typically chart, I'll mark up the order, and then once the order is ready to go, I just hit buy or sell on my MT4, which is what I execute all my trades on. So this copy right here. All these trades are executed on MT4. This account right here is my main one. So I just execute all my trades on this account right here, the middle one, and then everything copies over. So if I hit buy on this account, all these accounts hit buy too. So that's what I'm using. Yeah. I just do everything manually. So everything is, if you want to trade directly on TradingView, you have to use a broker that's compatible. So if you want to trade directly on here, I would recommend looking into Tradeovate. But the problem with Tradeovate is that you don't have you can't add a copier to it. So you got to be okay with just one account. So that's kind of a downside, right? Is you want to have multiple accounts. But if you're just focused on just trading one account, then Tradeovate is typically, that's what I use. But you can log into Tradeovate here. If you go to trading panel, you can go to Tradeovate, you just log into here and you can trade directly on TradingView. The only problem is that there's no copier, so it's kind of pointless for me because all my accounts are on MT4. So that's going to be one of your options. And I use that personally, so I know it works well. Other than that, let me scroll up real quick. Let's see. So Alan is asking, is that what the bars are looking for, liquidity? So liquidity is a little different. It depends on the strategy that you're referring to. Alan, I'm not sure what that question kind of entailed to, but liquidity pushes, what Andy was asking about, are basically, so what I do with liquidity pushes, so I'm not sure, I know you're new to the group, but basically every morning before market opens here around 6:30, I start on the weekly time frame. And what I do is I mark up these high lows that have not been tested. So like, for example, this is what a clean chart looks like. Once I turn on my high low indicator, you'll have these high lows here that are untested, right? So what I do is I mark up these high lows. And the reason why I do that, my logic behind this is because whenever people enter trades, they typically place their stop losses at these previous high lows, right? And they usually just leave them there. So I mean, just depending on like where their TP stop loss is set, the stop loss is typically going to be set at these high lows. So for example, here I just mark up pretty much all of these high lows that have not been tested, basically high lows that have not been touched yet. I go to each level here and only the ones that have been tested. So for example, this high low right here has already been tested, right? It got touched right here. So I don't mark that one up. I just mark up the ones that have not been touched yet, because my logic behind that is that, okay, if this hasn't been touched yet, and this is a high low that's still sitting there, that's where a lot of people's stop losses are sitting. And I'm sure you've heard about stop loss hunts, right? So if you ever heard of a stop loss hunt, that's typically what happens when these high lows get hit. So that's why I just go down to these higher time frames and mark up these levels. You know, the thing is crazy. Now that Andy mentioned that to me about the stronger high lows, I think maybe we should probably avoid or just ignore these higher highs, because these higher highs and lower lows are considered strong rejection points. So I think if we were to avoid those, we maybe could avoid getting caught in these fake outs. So I'm going to take that into consideration. I'm going to have to do some testing on that, but now that he's mentioned that, I think it makes a lot of sense. Because he was looking for stronger high lows to enter these liquidity pushes, but those stronger high lows are actually points that you should avoid, because that's typically where the bounces happen, because those are like considered support and resistance, or sometimes people consider them supply and demand. It just depends on how you're measuring it from. But yeah, basically, so this is what it looks like right here, Alan. We mark up all these levels here, and what we're typically doing is we're looking for these points to get tapped and go through a a breakout once price touches them. So like what Andy was talking about earlier is identifying these higher highs. See, like for example, right here, it's a higher high. This probably should have just been avoided. And if this would have been avoided, the fake out could have been spotted. That's interesting. Okay, so I think I might. Okay, so I think moving forward, I'll color them a different color. So I think for blue, I'll color those as normal high lows. And then for the higher highs and lower lows, I'll color them red. And that might help with the accuracy for these liquidity pushes. That's a really good, I'm glad Andy brought that up, because at first I was like, I was thinking how it was counterproductive, but now it's actually productive because it kind of shows you where not to enter from. So I'm just going to avoid these higher highs and lower lows moving forward. Good. That's something you learn. I feel like I learn everything. Like, this is why I like having these mentoring sessions, because I don't think about this stuff. But then when someone brings it up, I'm like, okay, that makes sense. Now we should just avoid these higher highs and lower lows, because those are considered like support resistance, supply and demand. They're just points where people typically like to catch the bounce from. So let me put that in my notes. And we'll do that tomorrow. So for liquidity, color higher high, low, red for avoiding the high low. Okay. Good to know. All right, so I'll keep that in mind. Question over here from Alan. Alan's asking on TradingView, Hanko has a different price. Yeah, so I'm not sure if you're familiar with like how pricing works with brokers. So brokers set their own pricing. The thing with TradingView right here is we have the raw pricing. So you want to go off TradingView price. You're not necessarily pricing, but you want to go over the movements here. So you guys can see over here from our YM data. If you click up here, or I'll just type it up. So if you go to YM right here, you can see where it says CBOT. We're getting this data directly from the Chicago Board of Trade. So we're getting this directly from the exchange, right? For you, for example, you mentioned Hanko. If you type in US 30, and I'll go to Forex or whatever, indices right here. If you type in US 30, you're going to see all of these different brokers, right? Black Bull, Capital.com, 8Cap, Pepperstone, whatever this is. Whenever you click on these here, pricing is always going to be different, right? 34,029. You go over to capital.com, 34,023. It's a big price difference, right? So for us, we typically only trade off the raw data because you want to know where the real data is at, like what the actual price is. So for Hanko, it's going to be different from what it is on FTMO. From FTMO, it's going to be different from what it's on Hugo's Way. From Hugo's Way, it's going to be different from what it's at on Hero FX, right? Every broker is going to be different because they set their own price. So you can't enter from specific price. Alan, does that make sense? You have to enter from like what the movement is. So for example, if you give a high low that's marked up on here, you're still going to have the high low that's marked up on, like you can still find the same high low on whatever your Hanko is. That's where your entry point would be. So you can't go directly off price. You got to go directly off. Exactly. Yeah. So you're just entering off the candle. Exactly, 100%. You hit it spot on. So for us right here, typically when we're looking for an entry, like for example, the intraday scalp that we're looking at, right? So whenever I see the entry here, like the momentum candle close, or let me go to a better example. Like say for example, we'll just use this for an example right here. So as soon as I see the candle close, I have my quick trade manager open. So I'm not sure if you're familiar with the quick trade manager. If you're using Hinko, you can use the DOM, the depth of market. You can have it set up where, and I can't drag this over. I wish I could drag it over, but you can have it set up where you can have your TP stop loss already set up. So if you know how to use a DOM, or if you don't, you can just go to YouTube. Let's see if I go to YouTube real quick. Okay, so if you don't know how to use a DOM, it's called MC4 depth of market. You can YouTube this. This is what it looks like. So there's a depth of market tool, and it looks like this right here. This tool right here in the middle. So what you'll do is you'll set your lot size in the middle. You'll set your stop loss right there and your TP right there. So as soon as the entry happens, you hit buy or sell, and then your TP is already set up. Your stop loss and TP already set up. So as soon as you enter the trade, once it goes to TP, it closes you out automatically. That's how I trade all my trades. That's why like all my trades are like pretty much perfect. Like whenever I get in, whenever I get out. So this is a tool that you might want to look at. It's built into MT4. Yeah, like literally you just set a TP stop loss. So say for example, you're entering a trade on Hingo account, right? And you're entering with the 0.01. You put 0.01 right here for your stop loss. If your stop loss is 100 pips, you put 100 or you put 1,000 there depending on your broker, and then 100 or 1,000 for your TP. Sometimes it's usually at 1,000 because if you're doing 100 pips, you'll do 100.0, but you can't put a point there. So you'll just put 1,000. It's just 100 and then an extra 0 at the end. So you hit buy or sell, and then your TP stop loss is automatically placed. So like as soon as price spikes to your TP, it closes you out automatically. So you're just in, out, profit, and then you're done. That's pretty much how I enter all my trades. So that's a tool that you might want to look at, especially if you're just going to be following, on the live sessions. Alan is asking if there is a large draw. What do you mean by that? Large draw. On the depths. Well, what do you mean by draw? You mean drawdown or draw? Like, so you're talking about drawdown. Drawdown it's not based off the tool. The drawdown is based off what your spread is. If your spread's super wide on Hinko, then you're going to go automatically to the drawdown, right? There's no specific drawdown. The drawdown is set to your broker. If your broker's spread is like 300 pips, you're going to enter at a lower point. So like, for example, so right now in FTMO, the market's closed. Obviously the spread's super wide, right? So if you were to enter a trade here, say for example, you entered this trade here. I mean, obviously you're not going to enter this trade here, but say for example, you entered a trade and say your TP stop loss was like 15.15, right? So just using this as an example right here, I mean, the tool doesn't set your drawdown, it's your broker. So if you were to enter a trade right here, for example, like something like this, and say your spread is like 30 points or 30 pips or whatever, you're going to enter at a lower point, right? So if you enter right here, for example, and your drawdown is, right now it's 300 pips, so that's about 30 points, a little over 30 points. You're going to be entered at this point right here. So you're not going to, you're going to want to enter right there, but when you enter the trade, you're going to enter right here because of your spread. So you're not actually going to, you're going to be in drawdown because of the spread. You're not going to be drawdown because of the tool. You're in drawdown because of your spread. So I mean, it depends on when your entry happens. For us, typically when you trade in the morning, a spread's pretty tight, so you're not going to get in for like that much drawdown. If you trade with something like TradeObate, so like I was mentioning earlier, TradeObate, they have like almost zero spread sometimes. So it just depends on your broker. If your broker is reliable, spread's tight, then you're going to get in with no drawdown. With TradeObate, I rarely go in with drawdown ever. Sometimes I go in with a small drawdown, but a lot of times it's never at like any drawdown at all. Where is TradeObate located? It's in the US. It's a futures broker. So it's in Chicago, I think. It's a regulated broker. So you need to have like capital to trade with them. You can't trade with like $100. That's like usually the reason why people trade with like Hanko, because it has such a wide leverage. So you can trade with like $100 or $200. You'll have to deposit like at least 1,000 to like 10,000 with TradeObate. Like with all the regulated brokers, they typically require a higher deposit because I mean, obviously they're regulated. So they require low leverage. Yeah, so any of these brokers that you see right here, a lot of them are going to be located in the US. So if you look for anything that's directed or that's directly associated with TradingView, like all of these are in the US for the most part. TradeStation's US, Awanda I think is like US and Canada, Forex.com is US, TradeObate's US, AMP is US, Interactive Brokers International, but it's US. Basically all these here are going to be pretty much US for the most part. You'll find like the better, like you'll have like the best execution times and best spread, but it comes at a price, right? You're gonna have higher commissions, you're gonna have higher or lower leverage, you need a bigger deposit. It's just up to, it's up to preference. So I mean, it's like you're either gonna pay more for the premium for a better product, or you're gonna go to like an unregulated broker and get a kind of subpar product, but you can trade with less money. All right, let me scroll real quick. I want to make sure I didn't miss any other questions here. All right, question from Maria. Maria's asking, can we review the high-low scalp strategy? You mentioned it one today during live. Yeah, sure, Maria. So let's review that real quick, and then I'll get back to the next questions down below. No, you're fine, Alan. I'm glad that you're asking questions because usually these mentoring sessions are pretty boring because nobody asks any questions. So you're fine, Alan. It's good that you're asking questions. I'm glad that you are, because you're keeping this mentoring session going. Typically, this mentoring session would be done by now, but since you have questions, I'm here to help. So yeah, ask whatever questions you guys want. It doesn't matter if it's a dumb question. There's no dumb questions. Like I'm here to help you guys out. I'm taking time out of my day to just answer these questions. So whatever you guys need help with, if you guys are new or whatever, I'm here to help you guys out. So let me just answer this question from Maria real quick. She wanted me to review the high-low scalp. So this is the high-low scalp that Maddie took. I didn't take this trade, but this is what Maddie took today. That's how he locked in his profits over here for 945. He just took a quick high-low scalp. So the trade that he took was right over here. So let me just put up the criteria for the high-low scalp. This is another strategy that it's a favorite amongst a lot of people. I don't take it as much, but I mean, it still works very well. So if you guys remember the bias for today, the bias was to sell. Trend was like, I mean, majority of things here were bearish. So looking at this over here, let me just draw this. Okay, so we have a low right there marked up. So first, confirm overall bias. I can't confirm it right now because we're later in the session. I can't pull up the retail sentiment because it just wasn't there. I mean, it was kind of like a bearish neutral, but it was still bearish. And then the fundamentals here, I think they were down like 100 points. Now they're up 40 points. So I can't show you guys what the bias was at the time, but I just remember from this morning that it was bearish. So first you want to confirm the overall bias. Retail sentiment was bearish neutral. Fundamental bias was bearish. Any technical bias was bearish on the short term and the long term. So with that said, we had an overall bearish bias here. For step 2, you want to confirm the previous high-low using the high-low indicator. So looking back over here, this is the previous high. You can see 5 candles pass after it. There's a high here, 1, 2, 3, 4, 5. This is the previous high. And then this one right here is the previous low. So you can see this low right here, 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 candles past it. And that's going to be the criteria for the nearest high and the nearest low. So we have the nearest high here, nearest low. Step 3, confirm price break and close past the previous high low. So moving on to the next candle. This candle right here breaks and closes past the previous high low. Once you've broken past that previous high low, you go to step 4, confirm that you're trading in the direction of momentum. You can see over here we have a sell momentum. So everything lines up, right? We have an overall bias for a sell, confirm the previous high low right here, confirm price breaks and closes past the previous high low, which is right there. Fourth, confirm that you're trading in the direction of momentum. There's a sell momentum right here. Confirm price is not in a range or consolidating. I mean, yeah, I guess you can say price was kind of consolidating here a bit, but it finally broke out of it. So price was ranging here slightly, not a big range, but slightly, and it broke outside of it. So it's no longer in the range anymore, right? Once you've confirmed all of that, you want to confirm price has not touched the previous swing before the break and close. So before this candle right here broke and closed past it, there's no candles that have touched this low, right? So with all that said, you enter on the next candle right here for a sell. You go for a quick 100 pips. Your stop loss is at 300. You got that set up right there. This is just a safety net. Whenever you take this trade, typically, you know the trade's going to hit. You're not expecting to lose the trade. And this is the setup here. You let the trade run. Full TP right there. I mean, obviously, you could have ran with it longer, but if you're following the original strategy, you would just go for the 1030. But again, if you want to do this and go for a 1-to-1, you can see the ATR right here was 17 at the time, right? So what you could have done, instead of going for 1030 right there, you could have entered right here for 1717. It's just up to preference, right? However you feel like doing it, it's up to you. The strategy works fine either way. Right here, you go for 1717 instead of 1030. The trade still works out fine. So it's just up to preference, you know, how you want to set up your TP stop loss. If you want to use the original strategy is going to be good, but you have to be on point. You can't be making mistakes. You can't take shortcuts. You just got to be on point with it. Maria's asking, in this case, the low must be lower. No, it just needs to be a high low. Maria, it could be anything. It can be a lower low. It can be a high low. It doesn't matter what it is. It just has to be a higher low. So it doesn't matter if it's a lower low or for a high low or lower high or whatever it may be. It's just any high low. You're just basically this strategy right here. You're looking for a break in continuation. So I know like some of you guys, like it might seem a little more complicated than it really is, but you're just looking for price to break structure. So you see how price broke structure right there, and you're looking for a continuation in that direction. You're also looking at the momentum here so that you know that price is supposed to go in that direction, right? So we have another one right here. So there's one example right there, Maria. Let me show you one more example, because this strategy is very simple. It's not complicated at all. It's just I created these indicators to make things easier because a lot of people can't see this stuff unless like I make it super clear, right? If I put requirements, and everything that we trade here is system based. So another example right here, right? So we have bullish momentum. We have price breaking, closing past the, actually not this one, the next break. So right here, I'll just draw both of these. So you can see like where this one is not valid, right? So this right here is not valid because these candles touch that high low. So that's invalidated. This right here hasn't been touched yet. This one broke past it. Same thing, you're just looking for price to break structure, which is breaking right here. You're looking for momentum so that you know you're trading in the proper direction. You can use the trend if you want, you don't need to, but the trend right here is bullish. There's so many confluences you're indicating that this is going to work. And then it's just a break of structure and continuation. So again, right there, same thing, 1030 split. Let the trade run. And full TP right there. So very simple. It's just playing your cards like in your favor. You're kind of just you're using all these confluences here to confirm like, you know, if your trade's going to move in that direction, and then you're just riding the wave for the most part. Yeah, no problem, Maria. If there's any other questions regarding that, feel free to let me know. Otherwise, you know, this is another favorite for a lot of people. I mean, I think every strategy that I've created, there's a group of people who like that's their favorite strategy. They all work very well. It just depends on like what you're looking for. I mean, even for that strategy, I mean, that could be another strategy that can be used for you know, initial strategy on open or something like that. But again, I don't want to get too ahead of myself. I'm already testing like 4 strategies. There's no need for me to add another one to the list, at least not yet. So, all right, other than that, let's see what we got over here. All right, let me scroll up real quick. All right, Miguel is asking, Sean, could you please repeat the broker you use for your personal account using MT4? My master account isn't my personal account, it's my FTMO. So my FTMO is my main account. That's what I take all my trades on. So let me just show you guys my accounts again. So this account right here in the middle, this is my FTMO account. That's why it's more, the profits here are more compared to everything else, because this is my 200K account. So I do everything on my 200K account, it's my bigger account. So I have more focus on that account. I want the most profits to come out of that account. So that's the main one. For my personal accounts right here, my personal accounts are actually a lot smaller. You can see they're only 10,000 each. So I have 10,000 in each account. I'm trading, they're on the same broker, but I'm using two different symbols. I'm using their raw spread price and then the regular spread price. It's pretty much the same thing. So I'm trying to figure out which one gives me more profit. And I'm going to stick to that one. I'm just going to move all these funds to that account. And then I'll have like 20K in that account I'll be trading. So for my personal account, I'm currently testing out Hero FX. I've never used them before, but they seem pretty decent. Other people, I've seen a lot of other trading people online use them. So that's what kind of led me to them, but I don't recommend using them until I get my withdrawals. So right now I'm currently up 3,000 on one of the accounts. I'll probably withdraw like at the end of this week, about 1,000 on this one. And then for this account over here, I'll probably withdraw at the end of the week, 1,000 as well. I just want to see if the withdrawal process is cool and smooth. And then, I'll recommend it, but I can't recommend them right now because I haven't requested a withdrawal from them. I want to be transparent. I'm not just going to tell you guys, oh, you use this broker, and then I haven't gotten a withdrawal from them yet. Like, I want to make sure they're good because, my image is, I do care about my image. So I'm not going to give you guys any bad advice. I'm never going to point you guys in the wrong direction. I'm usually going to be pretty straightforward with the stuff that I'm using and stuff that I do recommend. Like for the funding companies, the only funding company I recommend is FTMO. I've been using them for a couple of years now. Pretty solid, straightforward, and they're good to use. Yeah, no problem, you go. So yeah, I probably wouldn't use them until maybe after next week, once I get my withdrawal from them. Because that was my main problem with my last broker. I started having withdrawal problems. Like I started withdrawing a little bit more. Typically I'd withdraw like maybe 1,000 or 5,000 a week. And then it went to like, I started withdrawing like 10,000, 20,000, and it took longer to send me my withdrawal. So I just want to make sure that my money doesn't get stuck into like these unregulated brokers that are overseas, because technically they can take your money and disappear. They don't have to give you your money because they're not under any regulation out there. All right, let me see if there's any other questions. Let's see. Alan said, if we have to shut down, do you think it's back in, or will there be a large move? What do you mean by that, Alan? So let me see. Alan's question was, if we have a shut, okay, sorry. Let me just reread your question. I read that wrong. So you said, if we have a shutdown, do you think it's backed in, or will there be a large move? I don't think it's going to affect the, baked in. Gotcha. So yeah, I think that's kind of where I got thrown off. But yeah, I think it's baked in. I don't think it's going to affect the market too much. You might get some volatility spikes like throughout, because it's going to affect inflation and stuff like that. Like every week we have inflation news. So you got to tie in a lot of things. So if we have a shutdown, I think there's an ultra-motive agenda to the shutdown, right? You got to keep in mind that the elections are coming up next year. So there's a couple of factors. There's the elections, there's the inflation and the interest rates going up. There's the depression, like we're supposed to be in a recession right now, but nobody's ever confirmed it. Technically, we are in a recession. If you look at CNBC, there's a lot of different news events here. So I don't think the shutdown should really affect our thought process too much, because we're just scalping. It's not a big deal for us. We're just going to scalp again, like 6:30 to 8, be in and out of the markets. I think the shutdown and stuff like that will affect people who intraday trade and swing trade, because what will happen is they'll take trades during a certain period, and when that shutdown news comes out, it's going to screw up the market, right? But for us, it's not a big deal. That's why I like to scalp, because a lot of these news events don't really affect us. So yeah, for me personally, I think it's baked in. But then again, it's only baked in during our period between 6:30 and 8. I'm not seeing too much of a move. Is someone who intraday trades like all day from like 6:30 to 12, or someone who swing trades, their opinion is going to be way different, because they're going to say, okay, this is going to affect the market. Obviously, it's going to affect the market. But for us, it doesn't really matter to us, because we're either just going to sit out of the market and just wait for things to stabilize, or we're just going to take our quick trade and be done with it with a day. So that's another reason why I like to scalp, because I don't really get caught in a lot of this market manipulation. You know, sometimes here and there we'll get caught in the manipulation, but a lot of times we're not really the suckers that get caught in that. It's the people who trade throughout the day, because the market's always shifting. So yeah. And also, I don't know if you guys saw this too. It says credit card losses are rising at the fastest pace since the great financial crisis. So, you know, if this doesn't shout recession to you guys, I mean, these types of news events have been coming out for like the past couple of months now, past couple of months and past couple of years. A lot of inflation news, interest rates are going up, of course. Another thing to look out for is interest rates increasing either next month or in November, because they're going to go up in October, November. I don't think they'll go up in December because it's Christmas time, but interest rates will go up probably next month or the month after. And then that's just part of the game, right? It's like, we don't really care about this stuff because it doesn't affect us personally. Well, I mean, technically it does, but that's why for me, I'm saving a lot of money, a lot of cash. A lot of these profits that I'm making from trading, they're just being, I mean, I'm just stockpiling it basically for like a rainy day, you know. Once real estate starts to boom, say next year, I'm gonna have all this money to just buy all this real estate. So like the thing for me, guys, is I like trading, but I like trading to an extent where I treat it as a business. It's not like something where I live off it, right? I make consistent profits every month, so I already have a whole bunch of cash just already sitting around from my profitable years last year and the year before. Now it's kind of just, I'm trading for fun. Like I trade and the profits are additional, but I don't necessarily trade because I need to make money to pay for my rent, right? Or to pay for my bills and stuff like that. I got a bunch of money sitting around from last year's trading and the year before that. So for me, when I trade with you guys during the live session, you guys can see that I'm not very stressed out because I don't trade to live. Like I live to trade, basically. That's how like I see it. And hopefully all you guys will be at that point, you know, in the next year or so. Obviously you have to build a foundation here. And then once you get really good at trading, it just becomes a game to you. It's like, how much money can I make this week, right? Like I'm surprised I made this much money from all my accounts. Typically, I never show my monthly profit. So like this past month, you know, keeping track of my profits is like crazy because it just adds up every single day. I take one trade, that's like an extra 10K to the to the total for the month. And it's just, I just treat it like a game. I treat it like a game, but I also treat it like a business. So, all right, guys, I think that's it for now. If there's any other questions, you know, feel free to put them in the chat. Otherwise, we've been on this live session, mentoring session for about an hour and a half. This was a pretty good session. I'm glad that you guys had a lot of questions because, you know, these sessions usually don't last very long. They usually last like less than an hour. But I'm glad that this session was well worth me getting on for. Because I just hate getting on these mentoring sessions and there's no questions and I'm just kind of going off on a ramble. But I think today was good. Alan had some good questions. Maria did too. Andy, everybody. So, all right, guys, I think that's it for now. So, all right, guys, if you guys have any other questions, feel free to put them in the chat. Otherwise, we'll pick this back up tomorrow for the next live session and we'll go from there. So, all right, guys, I'll catch you guys back here tomorrow.